Hi everyone, welcome to another weekly Forex forecast for the week ending March 20th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to discuss the Euro USD, the Pound USD, the Dollar Yen, the New Zealand Dollar versus the USD, as well as gold. We've seen some massive moves recently, so I'm going to show you exactly how I'm navigating these markets, and I'm also going to show you why I don't think that gold is a buy, at least not at the moment. So let's get to it right now. Quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. So first up, we have the Euro versus the USD, and if you saw my post from a few weeks ago, you know that I was targeting 114.50 following the break from 111.70. So we have this descending channel now that's been in place since the 2019 high. And if I move out to the weekly time frame, you can see how this descending channel has directed the price action since this 2019 high back here. So we have this high right here, as well as a well-defined support level. Now 114.50 on the other hand was the previous range high from back here. So again, I'm on the weekly time frame and you can see how 114.50 was this range top that was in place for over a year. Now, if I move back to the daily time frame, you can see how we got this breakout from 111.70. So this was the top of this channel right through here. So we got this breakout here, and then the Euro USD tested that 114.50 area. Notice too that the pair never did close above it, so this area up here was always intact as resistance. Now, given this latest rotation lower from 114.50, a lot of traders would be looking to buy the Euro through here. And initially that was my plan too. However, look how aggressive this pullback was. It's almost a mirror image of what happened on the dollar yen just a few weeks ago. So we're going to talk about that one shortly, but if you notice on the dollar yen, we had this break above this wedge top right here that I talked about on the blog, and notice how aggressive this pullback was. So that triggered a false break, and we're seeing the same exact thing happen on the Euro USD now. So Thursday's session managed to close above that channel top right here, but Friday's session of course closed well below this 111.60/70 area. We can also see how the pair bounced from that 110.70 support region. So that means this week all eyes are going to be on this 111.70 resistance area. As long as the pair stays below this region, this up here to me looks like a false break, which could trigger an extended move lower, perhaps all the way down here into this channel bottom. And keep in mind too that we still have that open gap from April of 2017 around 107.24. So I mentioned this on the blog a few weeks ago, and as you can see, that gap at 107.24 right down here was never closed on this swing low. So as long as this 111.70 area stays intact as resistance, I do think we could see a rotation lower, perhaps back into 110.70 with a close below that, taking on 109.90, 109, and 108.25. But I do think that we could see an extended move lower to close that gap from April 2017 right around 107.24. So if you watched last week's forecast video, you know that I was talking about this 131.70 area on the British pound. So here we have the GBPUSD, and if you've been following me for a while now, this ascending channel should look pretty familiar. So this channel extends from the 2019 low, and I've always said that this level is the one that buyers had to break in order to send the pair higher. Notice how this candle up here tested the bottom of that channel before we got this massive sell-off last week. Now, I had no idea that the pair would sell off this quickly, but as you can see, this channel is still very much in play. As for the coming week, it's no surprise that just like the Euro USD, I am relatively bearish the British pound. Now we did see a slight intraday bounce from this 123.80 area on Friday, but notice how we did close below it. So it's all going to come down to Monday's open, and this applies to any market, especially when you start to see volatility like this. So Monday's open is going to be critical here, but as long as the pair stays below 123.80, that area is intact as resistance. And as for support, we have the 12200 area as well as the 120 spot down here, which is of course the support from 2019. Now it's going to be a little bit trickier if we do see the pair trend below that 120 spot, because we are getting into no man's land down here at all-time lows. All right, so I'll be sure to update the group if we do see a move that low to try to come up with where we could see the pound go next. But all in all, I do think it's going to come down to 123.80 resistance this week and that 12200 and 120 support. Now, if we do see a close back above 123.80, we could very well see the pound head up here toward this 125.70 resistance area based on this high back here and this low. But again, I'm only interested in selling the British pound right now, which is the same outlook as the EURUSD. So back at the end of February, I talked about this dollar-yen break above this multi-year wedge pattern. So if you remember that, on the weekly time frame, you can see how we had this multi-year wedge, and we also had this break above the top of it. Now, one thing about this breakout and retest is that the retest happened far too quickly. So notice how the rotation lower spanned only a few days, and this pullback right here I mentioned on the blog and said that it was far too aggressive and that a false break was more likely than a rotation higher. Sure enough, we got the close below this wedge top right here. Now, as soon as the dollar yen closed back inside this wedge pattern, I was looking for shorts and I rode the pair all the way down here into this wedge bottom. And you can see how the pair even moved quite a bit lower than that wedge support. Now, Friday's session did close back inside this wedge. However, here's the thing. This is a move on a Friday, and I don't necessarily trust this move as of yet because I do think that Monday's open is going to be critical. So the first 24 hours of this week are going to be essential in order to see where the dollar yen is likely to go over the coming days. So I'm out of my short position here and I made quite a lot of money on it. So I'm in no hurry to trade the dollar yen again. I would rather give this market some time to see where we go next. And again, I think the next 24 to 48 hours are going to be key here, but I'm not getting bullish the dollar yen because I do think that these equity markets still have more losses ahead. So if anything, I would be interested in playing a close back below this wedge support down here around 105.70/80. So if we do see this market sell off again and start to take out some of these support levels, I would be interested in getting short the dollar yen again. But as of right now, I'm going to stand aside and see what happens on Monday. Now, key resistance for the week comes in around 108.30/40. And if I drop down to the 4-hour time frame, you can also see how that area intersects with a short-term ascending channel. So if I use this recent low to draw the bottom of this channel and connect it with this recent swing high, you can see where this 108.30/40 area is one that buyers have to take out if they want to send the pair higher. And this is another reason why I'm not convinced about this break back inside this wedge pattern. This was a Friday move, and this ascending channel does signal that we could see another rotation lower. So we're going to have to wait for the first 24 to 48 hours to see how this market plays out. But I'm certainly not buying the dollar yen right here. I would rather look for selling opportunities if we do see some weakness develop early this week. I discussed the NZDUSD a few times last week where we were looking at this multi-year wedge pattern. So the bottom of this wedge goes all the way back to the 2000 lows. You can see we have this low right here, and we also have a recent retest right here. Now the top is also defined by 3 touches with this high back in 2014, this high right here, and this high. So the pair did confirm the breakdown with last week's close, closing below that wedge support. All right, so from here, I do think that we could see more losses from the New Zealand dollar. And if I move over to the daily time frame, you can see where this 6200 area is the intersection of a key horizontal support and also the bottom of that wedge pattern. So this area is resistance moving forward, and 5920 is the level I pointed out last week as key support. Now below that we have 5650, and all of these levels, I pointed this out to members last week, but all of these levels are key price action levels going back several years. So notice how 5920 was support back here, and it was also resistance before that. Now 5650, same thing, resistance back here, resistance, and support. Okay, so each one of these levels is a key factor going back several years. And of course, this 50 spot down here was the financial crisis low from 2008, 2009. So unless last week's move was a false break, I do expect more losses from the New Zealand dollar, including down here is a 59.20, 56.50, 53.30, and of course, perhaps that financial crisis low down here at the 50 handle. Just keep in mind that any move of this magnitude would likely take weeks and months to play out. So this is not something I'm saying is going to happen next week, but we could very well see the pair trend lower. Now, of course, if we do see a close back above this 6,200 area, that would signal a false break and send the pair higher. And just keep in mind that we have seen false breaks from the dollar yen and now the euro USD. So you have to account for the possibility of a false break here, just like you should do with any market. Last but not least, we have gold, or XAUUSD. And it's no surprise why I haven't talked about this market recently, because look at how choppy this price action has been up here. So anytime a market starts to do this, I tend to stand aside because it's incredibly difficult to identify where the market is likely to go next. However, given this recent sell-off, I do think it's a time to stand aside if you are trying to buy gold, simply because we have this aggressive sell-off and we've also taken out several key levels. Now, I do think that 1550 could serve as resistance for the week ahead. However, in volatile times like this, it always pays to take a step back and look at the broader picture. So if I move out to the monthly time frame, here's where I think gold could go next. So as of right now, we have what could be a bearish engulfing month shaping up on gold. Now, of course, we still have a lot of time left in the month, so this could change. However, if we do see gold sell off this week and next, we could very well see it pull back into some of these recent highs down here. And let me show you why I think so. If I take my Fibonacci tool and draw my Fibonacci levels based on this recent range, you can see where the 23.6 level lines up with some recent highs and lows. So notice how we have these highs up here, and we also have this recent low, and 38.2% also lines up with these lows right here, as well as this high. All right, now look at the 50% level. Notice this high back here and these highs. Okay, so I think that based on this, we could very well see gold pull back all the way down here into 1350/60 before we see that next rotation higher. All right, so we've had this nice bottoming pattern down here. However, I think now we need to see a pullback into that 50% area before we see buyers gather enough strength to send gold higher. So all in all, I am still bullish gold in the longer term, but I do think in the short term we could see some more losses here, especially if we see gold stay below 1550. And of course, 1515 is support, as well as 1480 and 1450. So again, I'm bullish in the long term here, but I do think we could see gold pull back further before it's able to set the foundation for the next significant leg higher. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.